Hi, this is Zahid speaking and welcome to my channel, Susanna, a channel dedicated in reviewing books and platforms that will assist you in your pursuit for financial freedom and better perspectives. I understand the audio sucks, but bear with me. Enjoy the video and I'll address this issue at the end of the video. It's tempting. It's tempting to invest in companies you're familiar with like Microsoft, Facebook, or Starbucks. You use them. You know a lot of people who use them, and you like their products, so they're good, right? Not if you're an investor. You see, these companies, which are regarded as large cap stocks, have already skyrocketed in value, and the chance for them growing is limited. If anything, these large cap stocks are only great for the investors of yesterday, who invested in these stocks when they were small cap stocks. Now, when I say great, I really mean it. Let's take a look at Dell. If you were smart enough to invest $10,000 in Dell in 1988, by 2008, your investment would have been worth $2.8 million. If you want to get those kind of results, you have to invest in small cap stocks. But how do you decide amongst the thousands of small cap companies out there, and what red flags should you look out for? How can you be certain these small cap stocks will continue to grow? This is what The Small Cap Investor, a book by Ian Wyatt, covers, and I'll talk about what his book does to guide you to become a successful small cap investor, to become an investor in the next big thing. First things first. The leader of a company might be a constant devil's advocate. The growth of one industry is rising, whilst another is falling. A company you're considering investing in has another competitor behind it. These are things out of your control, but what is in control is your opinion of it. Your perspective may be that devil's advocates are really a protagonist for a company's growth, that the growth or decline of one industry is not significant to what you're considering investing in. As for that competitor, it'll do your company good in making sure it stays ahead of the curve. There's no definite correct perspective, but what's important to consider is whether the perspective you have of events, things, markets, and people reflect the potential of the future and not the limitations of the present. White asks you to consider these things, and he also asks you to look at your own behavior to find the next big thing. This is necessary if you want to find the next small cap stock that will skyrocket in value. I'd recommend reading up about small cap companies of the past that have grown. Maybe their methods and services has yet to be implemented on different industries. It's easy to say in hindsight why something has grown. However, it's difficult in foresight to understand why something will grow. Or is it? Second thing second. You have to understand financial statements, such as income statements and balance sheets, to know what the figures are telling you. It's not easy, and it takes some getting used to. But if done well, you can recognize the red flags in accountancy, understand if a company is actually growing or is simply appearing to grow, and what small cap companies are worth investing in. If you're a novice when it comes to financial statements, get this book. You're going to have to be financially literate anyway if you want to understand what's going on in a company, and in the long run, what's going on in the market. Let's take a look at a typical red flag that White teaches us. When a company defers its results on a balance sheet. As an investor, you have to make sure that that deferral is justified. Companies could avoid telling you the real deal of what's happening, maybe because they didn't reach their target revenue. They could also be sugar-bowling, where they defer their revenue for future years because they did too well. Now, if a company thinks it's okay to underreport, guess what? They might have the same rationale when it comes to overreporting. White's concise explanation of financial statements and what they mean for investors will be of use to everyone, novice or experienced. But White goes further, and we not only learn what to make of financial statements, we also learn what to make out of financial projections, whether it's projections from the respective companies or analyst estimates. You'll learn what to make out of financial guidance, but in the long run, be equipped with the know-how to be an independent investor. Third thing third. So far, the book calls you to have the mentality and the financial literacy to assess small cap stocks. But at the end of the day, you're going to have to enter and exit your order. This is where the skill of technical analysis comes in. Now, when I was reading this technical analysis can seem insignificant when dealing with small cap stocks. The thing is, if you've assessed the fundamentals and the potential of a company, what's the big deal when you enter or exit your trade? If you're right, you should already be looking at that 1000% increase or more. Well, it is a big deal. The technical analysis that Wyatt concisely teaches us is useful, and if implemented, allows you to rightfully maximize your profits. More importantly, what he teaches is transferable to any type of investing you involve yourself in. So for the novice, this is a short and concise beginning in the world of technical analysis. For the experienced trader, it's a pleasant lesson in what's happening to your stock or the chart once it has grown from a small cap to a medium cap to a large cap. The thing is, the technical analysis is nothing if you don't understand a company's financial statements. And the financial statements means little if you're unable to assess the potential demand of the company's industry. In your attempts in assessing the potential demand of a company's industry means little if the perspective you have of things around you is fixed on the limitations of the present. Fourth. You may have found the next Facebook or Microsoft, but the rule still stands. You can't invest your whole capital in one stock and risk losing it all. That's just bad risk management. You've got to diversify your portfolio, but you shouldn't diversify your portfolio to the extent that the success of small cap stocks has been diluted in your portfolio and is of little significance. I mean, come on, what's the point? So Wyatt asks you to determine your strategy, your portfolio, and he puts forward his methods when it comes to diversifying his portfolio. At the end of the day, he justifies his reasons for small cap stocks, not just because they have the potential to skyrocket in value, but for their potential to best perform in difficult times. Remember, it's not all green on the side of small cap stocks. It can be illiquid and extremely volatile, but at the end of the day, these small cap stocks will be the large cap stocks of tomorrow. Finally, if you've read this book and implemented its 8-step guide, you're en route to being a successful, independent small cap investor. Successful because you understand why the small cap stock you invested in skyrocketed in value. Successful because you avoided the stock that seemed appealing, but its red flags were too obvious for you. Independent because you were able to make conclusions from financial statements and chart patterns yourself. Now that's pretty good. The Small Cap Investor by Ian Wyatt is concise, enjoyable, and packed with useful information. It even comes with a list of questions we should ask ourselves for successful investing. I recommend this book to anyone out there looking to have a growth-oriented portfolio, anyone bold enough to not follow the herd, and anyone looking to have an edge on institutional traders. Thanks guys for watching my first video on Arnot on YouTube. I have a support channel at Indiegogo for funding so that I can purchase a microphone and I can continue to do these projects better. Please like and subscribe, and I hope you have a good day, and remember, all the best. This has been Zahid. This has been Sazana. Thank you.